Good morning, traders. It's the 4th of December, and welcome to another edition of Top Quality Stocks, the December edition. And this time around in TQS, Top Quality Stocks, I'm going to look at just the top 20% of the stocks, meaning the top 20% in terms of earnings growth over the last quarter, as well as the top 20% in terms of earnings growth over the last year. So I've ranked these stocks in terms of per style ranking. Those with the biggest changes in earnings over the last quarter and a year will be in front of the queue. And then also, just to make sure I'm buying a stock with leadership, I'm also looking for the top 20% in terms of stock that's already outperformed the market. And I make my settings just under the 80 setting. And there's about 106 stocks. So these are top quality stocks in terms of earnings growth over the last quarter and year, just 1 year back. And also these are some of the strong best performing stocks. So I've ranked them in terms of market capitalization. Salesforce.com is first. Obviously it will need to digest that big acquisition that's announced. So I'm going to just minimize the screen. But you can see these companies all performed very well on an earnings growth basis. You can see a tremendous high earnings growth. Some of them didn't do so well the previous quarters, but you can see that you're capturing something that's just accelerating in his earnings over the last two years, so to speak, technically. So I've ranked these by market cap. So we'll start with that, and I'm going to minimize the screen because that's how you go through these stocks on a weekly basis to find the best trade ideas and setups. So it's well worth monitoring these stocks every day or every week. And the process is simple. You just go through, load your chart, and then go through your stocks stock by stock. Now in this case we can see that CRM, Salesforce.com, needs to consolidate the recent acquisition it's announced. So yeah, it's pulling back to the 144-day moving average, and if it tests the 233-day, that would be a nice entry point in the stock. I'm going to draw a horizontal line there, so that will be a nice entry point there. Charter Communications, breaking out of a base. If you're trading the breakouts, we've had a relative strength buy signal back here. There's one there after that rebound of the 55-day moving average here. Nice entry point there. Any pullback to the 21-day moving average would be a nice entry point in Charter Communications. Shopify, yeah, you can see also fantastic rebound here, the 144-day moving average. MACD signal came through. I think that's the money stream signal. Just hold on a second. I need to move this. Yeah, that's the money streams, not the MACD. I don't have the MACD on here, sorry. But nevertheless, you can see the key thing is just to capture these stocks as they pull back to 55 or 145-day moving averages or the 21-day moving averages. For Shopify is now stuck in a very long consolidation base. It's like forming a double bottom, looking for a base breakout. So the classic breakout buy would be around these top end levels there, or a nice pullback to the 21-day, this whole cluster of support. Yeah, kind of any nice area to look at adding some. Money flow indicator, money stream, already had a buy signal, so that's looking interesting. Zoom Communications dipped back down to the 89 period moving average here, testing that, so that's a possibility for a swing trade. We've not yet had the relative strength buy in the money stream buy, so we'll see. There is downside risk to the 244-day moving average, 350. That could be also a nice entry point. Looking at the weekly, but extended on the weekly, so there's still some downside risk to the top end of this base here. So looking if it's going to get down to this 350 level, snap back from that level would be a nice area to trade. AMD is just breaking out of a double bottom, huge double bottom here. We've had the MACD, the money stream buy, as well as the relative strength buy, so that is a nice long. Mercado Libre, specialty retail stock here. You can see it's just keep buying these pullbacks, trading. But extended now, you gotta wait for the pullback there. Autodesk just broken out of this base here. almost like a base on a base pattern. So any kind of snap back to the 21-day or 13-day moving average 270, that would be a nice entry point there. But the HIS market, business services, I think this one's also going to be bought, but nevertheless pulling back to the 34-day moving average down there, 89, 88, should be an interesting one. eBay struggling to advance, but nevertheless we did get a rebound of the 233 exponential moving average, and now it's back above the 144-day moving average, a possibility for a swing trade on eBay going into the fourth quarter festive season sales. So eBay might rally from that level, so we'll just put a line in here. Peloton Interactive, that corrected a little bit after becoming too extended from the moving averages. It's now on the 55-day moving average. Nice little rebound there. Had a as the money stream buy, performance is starting to pick up, so they could be upside back up to this old high 135 in Peloton, but I suspect the weekly is a bit extended still. Yeah, weekly is a little bit extended, so there's a bit risk in that one. Now the point about this list is it's not as it's quite a liberal list, because you're just looking for the last year and quarter, the biggest acceleration in earnings, and also looking at a strong performer. So you might find a stock that didn't do too well fundamentally the quarter or two before, the year or two before. So these are a bit more high risk trades than the usual ones. Seagen biotechnology stock rebounded from the 144-day moving average, now back above 55 days, so that's moving nicely. There was the money stream buy, relative performance buy, so that's kind of a nice point there. So that's how you go through the list. There's about 106, so it'll take a while, but just go through every stock. Liberty Broadband, bit extended, but nevertheless interesting. Looking for support, 144-day moving average. Wayfair struggling to rebound from that area, watching very closely to see if the price and volume action will come through. Etsy rebound from the 189 period moving average back above the old high, so we need to see a continuation of this breakout. We've had the buy signal there on both the money stream and the relative performance buy signal, so yeah, so that one is moving higher. So if it gets support at that top end level there. HoloLogic, medical instrument ones, nice rebound at 55-day moving average as well, 21-day moving average. There we go. Insulet Pod medical devices. Also these aggressive pullbacks to the 55-day and the 89-day moving average are great entry points. But yeah, this one is the next support zone. What about there? Biorad Laboratories rebounded from the 144. Now it needs to regain 155. We'll see if it's going to get there. Starting to underperform a little bit, so not exactly what you want to see. So you can see every stock, not everyone here is a buy, but it's worth keeping these on your watch list, because these are stocks with tremendous earnings and price momentum. And you just keep going through the scan like this every day or every week, looking for when these stocks get to an ideal entry point. You can see this one's trying to rebound from the 21-day moving averages there. Horizon Therapeutics needs to start picking up again, relatively underperforming. Black Knight Software, infrastructure software, is pulling back 55-day downside risk to the 89-day moving average. We'll see if it comes back in there at the bottom end of the space. A little bit extended on the weekly, but still worth looking at 686. So that's just the way you scroll through these, looking for ones that are pulling back to the 21-day, 55-day moving average, or things that's just breaking out of double bottoms or cup and handle type chart formations. Dynatrace is one that's coming back after rebounding after 233 moving average. So this one is looking good at these 144-day moving average. Fantastic entry point there. Yeah, it is now fighting for support there. So maybe into the year-end rally, it could get back to 46 and 48 anytime soon. So I will flag that one. That's interesting. GCI Liberty. First Solar, interesting there. Also something you just get when it pulls back to these moving averages. So these are the stocks you just add to the watch list. Keep looking at them when they pull back or when they break out of consolidations. After the breakout, you can see here this one broke out of a long consolidation period. So if you didn't buy at these levels, yeah, when it was pulling back to the 55-day and 200-day moving average, then you wait for the breakout. It breaks out. You'll have a few days to get in. You literally had a few days to get in after this breakout, and then a huge pop. So if you've missed the pop, then the next entry point is back here at the 21-day and the 13-day moving average, the cluster, and sometimes it comes right back to test the resistance level here, the breakout zone, and other times so that's the next entry point under normal circumstances. And when it pulls back to the 21-day, I suspect the 21-day is going to come back to a roundabout there, so maybe that should be another entry point. Rally, pull back, rally, pull back. So these are the stocks that we now have in a watch list. CoreLogic, Information Technology there. So just keep going through this, quite a mixed bag of stocks where we just looked at the earnings and relative performance over the last 6 to 12 months, and we're looking for the ones that are really motoring both on price performance and earnings growth performance. So you can see, just keep going through these stocks tick by tick, chart by chart, and you'll find a few quite compelling. A little bit extended, this one, Ultra Clean Holdings. Calix is pulling back nicely. Lindsay also on its way up. In the staircase we speak, this one broke out of a long consolidation base, so StoneX Group, capital markets can move higher. That one looks like it's still consolidating. Greenback Partners broke out of kind of a long small base here, and now it's starting up in the staircase, so to speak. Fulgent Genetics also rebound. Netcare Holdings, nice rebound from the old moving averages, long-term moving averages there, bit choppy market, but still one to look at. Vico Instruments, that's now broken out, moved higher. You can see we did have the breakout here at the top here, huge breakout, or this base here. You could argue this was another base breakout. And then if you missed that entry point, you had literally a few days to get back in, and now it's off to the races. It's in what we call the staircase. The target here would be these levels here at the top. There we go. Lumber Liquidators, Merchant Bank Ops. So you just keep scanning stock by stock each day, each week, looking for when these are getting to ideal entry points. So there's a few that's looking good right now, and there's a few that's looking good later when they pull back. We don't want to be trading in an extended stock, so to speak. But nevertheless, that's how you find top quality stocks with the top 20% in terms of earnings growth over the last quarter and year, as well as the top performing stocks. You want to be in the top 20% of the market that's outperforming the S&P and the rest, and these are the names. You might not see Tesla in here because Tesla's earnings relative to the rest is probably not, is probably further down in the queue, so to speak. But you might not see a few familiar names in here because these are, there's less gossip around them. It's more quality earnings, high quality earnings, and good stock price performance. And that's how it's best to do this, like on a Saturday, for example. After you've run the screen, you can then identify your trades for the coming week looking at these. But you can see we've had quite a lot of growth rates. Earnings per percentage change latest year, you can see tremendous high growth rates. And return on equity, some are still low, some are 2%, not exactly what you want. You can put a return on equity screen in there to reduce the list to, let's say, you only want things that's making 10% return on equity of 15, and then obviously you're going to lose quite a lot of the trade ideas here. But so this is what we call the hockey stick effect, where you look for stocks that's just accelerating earnings over the last quarter and year, and they have strong performance going forward. Okay, traders, until next TQS Top Quality Stock webinar, happy trading.